Hey everybody, my system has now generated a separate package of mutual funds and indices scanned by no different than stocks. I've shown these videos before with stocks, but in this case I'm going to show you a package of indices as well as mutual funds from both Australia and the United Kingdom. Now, these most likely are not practical. I'd rather be focusing on ETFs, but I can easily do that. It's just a query into my database. But I'm just going to show you some samplings of what you can do with this and some of the things that can stand out. And I'm going to show you a chart in Yahoo Finance that will indicate these standouts. So let's go to a typical, I've got about 5 here. About 5, 6 actually. So no different than what I've shown before. This is an index for United Kingdom for the sector asset management. Now it's going to have the same thing on the exchange, the country it's from, the mean, standard deviation, volume, skewness, beta, earnings per share current, next year, next quarter, market cap, the ATR for 5-day, 20-day, 60-day, 250. And of course we're not capturing the volatility. Now in this particular one, this is from London, the LSE, as you can see here. These are the only ones worthy of trading because of the EPS that's specified. But it's still not, the guidance just isn't there. I wouldn't trade them. If they're not standing behind their next year, next quarter, I'm not even going to bother trading them. Also, I don't know what their market cap is part of the problem with other countries, namely Europe. So it's very hard to know what the market cap is. So again, I'm not really interested in these set, but I'm just showing you these as examples. So nothing I wouldn't get too crazy on. Let's see what else we got here. We have, let me just see what else we got. We have here mutual funds, indices for general building materials. These are a little better. This one's a real standout for me. This one really jumped out at me as a index. Remember, this is the UK, so I'm unfamiliar with any of these. If it's US or Canada, I might know a little more. But these are the things that I'm not even sure if this is a bug or not, but you think it is. The current EPS, I mentioned this before, the first thing that jumps out at me is the EPS. What's the EPS for the next year, next quarter? You can see that their EPS for the next year, next quarter is just, it's incredible. At 116 and 133. So I'm not going to get too much into the statistics. I was going to put out another video on statistics, but I'm going to leave it at that. I'm just going to mostly point out the real standouts as I dig into these in the research and run more scans on these market sectors. Pretty well anywhere I like. Pretty well UK, Australia, Canada, US, anywhere in Europe as well, pretty well. Anyways, this is the Travis Perkins. So I thought it'd be interesting. Let's take a look at their chart for this. This is TPKL. Now this is from a 3-month. How it's risen has just been pretty astronomical. I mean, it's gone up, like 9%, 10%. But if they're coming back and saying, "Yo, our earnings per share is this high," that's something to really pay attention to. So I am not gonna be able to speculate that. Let's take a look at the 6-month performance, or even year to date. So that's from January. Let's take it over the last year. Now remember, people are going to go, what is this fund about? Well, it's all about housing in the UK. Okay, we know about the London housing market. Makes sense to me. It could be one of those indexes that does really well. But, I mean, the rise is just pretty incredible, and that's from the last year. So it really took off starting sometime in the fall last year, I guess in October, and it just has been on a tear since. Dipped a little bit, but who knows, it may take off. So you obviously want to check out what the consumer sentiment, housing starts, just to get an overall picture of how the UK market is, specifically around housing. This is something I'd be kind of paying attention to, and these are the sort of things I'm looking for. It's too bad you don't know about it in October, but that is a nice rise, and that's again courtesy of Yahoo. So those are the little gems that we look for. But again, that is a index for real estate. I think so. Let's take a look at a couple other ones. Now we're going to look at the general contractors. Again, I always look at these two. This is what I call the BS factor. If they're not going to put out their guidance for beyond a certain period of time, I don't see any point in investing in them. It just shows they don't have confidence in their forward analysis. So we can screw that one, I guess. Like, why would you want to invest money into a weak player, right? Okay, so here's our Travis Perkins. That's somebody I'd really pay attention to, that's for sure. All right, so let's take a look at another one. Okay, let me just, okay. So here we have some other ones. Yeah, these aren't looking too good. These are very weak players, and this is Australia Steel and Iron. We know that, but again, you can use these to generate your own data, your own research. Iron ore and steel in Australia, no interest. How's this now? Mutual funds, again, very weak, no interest. Okay, but let's talk about indices versus mutual funds versus, I haven't done it yet, but I can easily do it. It's just a query change to a database. Mutual funds versus indices. Well, I think I mentioned this before. Mutual funds are no good. They're too expensive. So again, I wouldn't even bother looking at them. But the indices are good because they're usually, generally, very low on the management fees. Same with the ETFs, that's why they're as popular. But it's just gems like that that you need to pay attention to, and I hope to basically to highlight those. But as said, the real factors I'm always looking at are these three: the EPS, current, next quarter, and next year. And that's what I'm looking for the breakouts, because these are guidance on how those companies, how those asset managers feel about their particular portfolio moving forward. So generally, they stand correct, unless they're involved in some kind of insider trading or something. But generally, it's pretty safe, because if they're off at that point, when they do say, let's say the guidance is at 116 in that quarter, and doesn't make it, guess what? They get punished pretty bad on the stock, and they won't have a job very long if they keep doing that, because the performance, the benchmarks are no good, so no one's going to keep a job like that. So I just want to show that, but I'll keep digging for these particular assets that are of just things that you really, that basically scream at you and saying, look at me, I'm important. And I've already shown one earlier today with Canadian Pacific. There's another potential is out of London in the UK for housing, real estate. And then obviously you can, as I said, confirm that outlook with your government data for your Eurostats on how the markets will look. I've shown already all past videos on that as well. All right, over and out. Hopefully this will help you out. Talk to you later.